Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Pamar.
Welcome to Wealth Matters podcast. I am going to talk to Mr. Chris Lustrino. He's the founder and CEO of KingsCrowd, the first ratings and analytics service for the online private markets. I wish it was out there. Where I started investing in startup back in 2015, and I got my back handed to me. I lost almost every penny I invested that year, about 50 grand. So I wish it was there and I would have done my due diligence and analysis, but I'm looking forward to using KingsCrowd moving forward. So just a little bit about Chris. He has raised about 3.5 million from 27 investors to date and grown his business to over 350,000 subscribers and about 20 full-time staff. So prior to founding KingsCrowd, he worked on behalf of a private equity clients at LEK Consulting firm from 2014 to 17 and supported travel tech startup Freebird in 2018 to raise an $8 million Series A prior to being acquired by Capital One. So welcome, Chris.
Hey, thank you so much, Alpesh. This should be a fun conversation.
Yeah, I can't wait. So Chris, the first question I ask every guest, tell us something funny or strange about yourself.
You know, it's an interesting question. And I thought this is kind of a fun, unique fact about me that I don't think a lot of people know. So in college, I was really into kind of teaching and tutoring. And so I got into some different programs on that. And I don't think it's wholly different from being a manager and working with people. But
right.
I ended up getting to be a tutor for student athletes and ended up tutoring a couple of like famous NFL players and hockey players,
wow.
including Luke Kuechly, who was like one of the best linebackers in the entire NFL for several years. So that was pretty cool. And I got to tutor inmates and help them prepare for their GED so that when they got out,
That's
they'd
awesome.
have, something to fall back on, which is pretty cool too.
Yeah, I think that's pretty cool, actually. Inmates, yeah. So why did you choose startups?
Why did I choose startups? Well, you know what? I started my career, as you mentioned, at LEK Consulting, and I was working on behalf of really large firms and large private equity funds and institutions. And it was interesting to me because one of the reasons I wanted to work in consulting was this idea that I was going to get to work for the C-suite and the management teams of these private equity firms in making their decisions, right? And what I quickly learned during my time there was that even when you're working directly for the top people at these firms, your ability to affect change was still rather limited. And my desire and feeling in my career is that I want to make a real impact. I want to have a really positive impact on the world and make things better. And it became very clear to me that the best opportunity and way to truly affect change is to be the one in the driver's seat that pushes that change forward. And so in creating a startup in a company and kind of leading it, I had the best opportunity as a founder to really be able to push forward kind of the destiny, the vision of the world that I want to see tomorrow.
That's awesome. Do you also invest in other assets like real estate, stocks?
So I am a huge fan of investing. And I very much, so when I got into all of this stuff several years ago, back in 2014, 2015, I started investing in all of the different alternative investing platforms. So I have investments in commercial real estate, residential real estate, startups, crypto, NFTs. I have them all. And it's a little bit of exposure to each one. I don't have a lot in any one, but I utilize all of these cool marketplaces that are out there now that allow you to make small investments and bets in all of these different places.
Yeah, so we are speaking the same language now.
Oh, we absolutely are.
I am pretty much invested in all kind of alternative investments. So it's pretty cool and trying to diversify, right? Because you never know which of those investments would become a gold rush, right? Because
so for me, my feeling is like, for the first time ever, the modern portfolio can be wholly reinvented from kind of the old school portfolio, right? It used to be 60% stocks, 40% bonds, and that switches when you get to about 50, right?
Yes.
And now it's like you could have 10% in real estate, 5% in startups, 5% in other alts like collectibles and crypto. And all of those can end up having very much outsized returns on a small portion of your overall capital. So it's a really exciting time to be an investor.
Yeah, no, I could not agree more. There is so much. You have cannabis to psychedelics, renewables, electric vehicles, all kind of alternative investments available to us. So I can't. I continue to look for new investment opportunities, and that's when I go back to KingsCrowd. So let's talk about KingsCrowd. How did you end up founding KingsCrowd, and what was the catalyst behind it?
Well, so I'm working at my job at LEK Consulting back in 2014, 2015, and I'm sitting there and I'm just getting so frustrated because from my perspective, I'm spending 300, 400 hours diligencing deals for other people to make those deals. And I'm
Yeah.
going, why can't I invest in this, right? I want to be a part of the game. This isn't rocket science. I can do this.
Yep.
And so I Googled one day, why can't I invest in the private markets? And that's when I stumbled upon the world that existed before, which is they were trying to protect the non-accredited investor and how that was changing thanks to both the Jobs Act, as well as just all of these new marketplaces and technologies that are allowing us to fractionalize and securitize any private market asset to trade online. And that just set me off. So I ended up running a fintech blog for a few years in that market. And then eventually that was acquired by one of the founders of Napster. And he said, if I seed you some funding, will you build a company in this market? And that was the fruition of KingsCrowd.
Oh, that's interesting. So how do investors benefit from KingsCrowd? Like the investors who want to invest in startups, and I have reviewed platforms like Seed Invest to Micro Ventures to Republic, Startup Engine, all that WeFunder on my podcast. So I have used most of them. How do investors benefit from KingsCrowd?
Historically, if you're a venture investor, right, you're an institution, you're a fund, and it's your full-time job to source and vet deal flow that's available for investment to you. Now, as an individual, there's basically no investments available to you in the private markets. It was essentially completely for institutions and very, very wealthy people with connections. Everyone else was kind of out of the game.
Right.
Now, with the rise of all of these marketplaces, WeFunder, Start Engine, as you mentioned, anyone can invest in companies starting with $50 in the private markets. So the challenge is you have a full-time job. Your life is not just investing. And you want to be able to be thoughtful and intelligent about the investments you're making. And so what we do is we help you source, diligence, and manage your portfolio of investments in this new private market space. So we aggregate all of the deal flow for you. So you don't have to go to 50 different marketplaces and look for the deal flow. And then we collect over 500 data points on each company. We have a team of 9 full-time investment analysts, and all they do day in and day out is act as a VC on your behalf to search and diligence these deals. And then we provide that all to you in a simple, easy, and intuitive way so that you can search and diligence your deal flow really quickly and really effectively.
That's awesome. So now I want you to spill the beans. So I want to understand what kind of process KingsCrowd analysts go through in figuring out risks and rankings of the startups. Because I look at the ranking now on KingsCrowd and I figure out if it's not over 4.5, I'm not even looking at it now. Before I would just go by my guts, right? I'm like, okay, I like the business model. I think this would be a good opportunity, right? Now I just go. So what process do this investment analysts follow? And are they specializing, each of these people, are they specializing in certain industries or certain trends?
I'll break it down for you here. So to start off, we have a 1 to 5 rating system, right? So 1 is not good, 5 is very good.
Yep.
And what we do is we take every company that's available for investment and we bucket them into 3 stages of the business: early stage, growth stage, late stage. So early stage is going to be all of your pre-seed and seed investments. So let's stay there. So then what we do is we take about 500 data points that are collected both manually and automatically. So it's about 50-50 right now. We take in all of that data. And in that, we're going to have things like their past year's financials, the terms of the deal. We're going to know who the founders are. We're going to know how much money they're raising, how they're going to plan to use that money, so on and so forth. And that comes from all of the form filings that those folks submit in order to do an online raise. Then we go and we do all of our own work as well. We do our own market sizings, our own market growth rates, all sorts of stuff. And we have 3 layers of internal audit on the investment research team. So one person collects the data and creates an informed opinion, and then 2 other people will go in and look at that. So it's all really highly reviewed and very accurate data. The last thing that we then do is we put it through a rating algorithm. We take those 300 data points and we bucket them into about 5 key categories of a business. So for instance, on an early stage company, we're going to look at things like founder's experience. So Quantitatively, that means looking at how many years did they spend in the industry they're trying to disrupt. Did they have any exits? If they had an exit, was it a positive exit or a negative exit? What did it actually look like? We're going to look at things like market size and market growth rate. We're going to look at the terms of the deal, the valuation, the discount rate, the security type. We're going to look at their performance. How much money did they raise prior? What types of revenues are they generating from that capital raise? So on and so forth. And we do a comparing and contrasting thing where we look at, if this seed stage company is a 10 million valuation and this one's a 6 million valuation, the one with the 10 million valuation is going to get dinged for having a higher valuation. But then maybe their founder is more experienced, so they do well on the founder experience mechanism. And so all of that kind of gets funneled through the rating algorithm and then spits out the final score. So that's a little bit about how it works.
Oh, that's interesting. And do you also look into the trends or what's coming, right? Like more like your, crystal ball?
There's a few really interesting things we get to do there. So first off, we get to see from an aggregate level, what industries are people starting to deploy capital into, what markets are hot, what valuations are high based on the industry, so on and so forth. So we get to see at the aggregate level what's going on. So for instance, at the beginning of the pandemic, we actually saw a ton of investment in like logistics, as a lot of people were talking about supply chain. And then companies started trying to raise capital on these marketplaces because they realized it was a hot market and that they could raise capital for it. So we get to see those types of things. The other thing that we offer to all of our users is a portfolio management tool so that they could visualize all of their investments from these many different marketplaces in one place to make it easier to manage them. And what we get to see is, what are people investing in? Where is there a lot of interest based on our user base? And you could start to learn about where there's retail investor interest and where there's market demand for certain types of companies. So there's a lot of really interesting insights that we kind of glean from that.
That's interesting. So we spoke about the ratings, the risk, etc. Also, I saw that there you had some other ratings like deals to watch or top deals. How do you come to that conclusion that these are the deals to go for, right? Because some people like me as well, they just want to find some deals they want to invest in, right? Because there is so much money lying around in the marketplace right now. So how do you come up with that idea that this is the top deal, or these are the deals to watch?
That's a great question. So, with any of this stuff, there's kind of two components, right? There's a quantitative view and there's a qualitative view. And we know in the world of startups, a lot of people say it's more an art than a science. We're challenging that notion that there's probably more science that should be involved in the process. And that's what happens when you have data at scale. You can start to utilize more science. But, there's still folks who like to be told just the answer. Like 4.2 versus 4.5, I don't know how to feel about that. Just tell me, is this great or not? They just want that answer. And the way that I would talk about it, it's very much akin to in the public markets when investment banks initiate coverage on a company and say it's a strong buy, a hold, that type of thing. We're doing the exact same thing with our qualitative analysis, where we're saying, hey, we're really bullish on this company. So a top deal typically has to be between like a 3.5 and a 5. And you might say, well, if it's 3.5, how could it be a top deal? One of the reasons why it might have gotten dinged is because of the level of risk of the company. But maybe the upside is still tremendous. So we're going to call that out. You're going to understand, listen, you're taking on a higher amount of risk in investing in this company, which is why it got dinged quantitatively. But if you look at, the fact that they're going to go to space and be a spaceflight technology company, they could be worth X billion dollars, and thus it might be really exciting for you. So we're trying to provide some of that qualitative lens as well. Typically, the way we decide to initiate coverage on a company is investor interest, kind of market movements, analyst interest internally, and then quality fundamentals as well.
Oh, that's pretty interesting. And how long has KingsCrowd been around?
So we've been around for about 4 years now. We've tracked nearly 5,000 companies, representing well over $1 billion in investment volume and tens of billions of dollars in terms of overall market value.
And the reason I asked is I want to find out how many of those deals, which were top deals or deals to watch, have been really successful, and how many of those have failed.
Both good questions. The reality is with startups, there's a life cycle to startups, right? And typically the horizon you're looking at is anywhere between 5 and 10 years to really see your meaningful exits. So right now, all we have to go off of is paper gains, which typically is going to come off of new rounds of funding, right? And what is their latest valuation? I can tell you that right now we've had some really strong success with highly rated companies. So we've had, I think between rounds, we've seen 50 to 200% like investment gains on paper type of thing. We've also had 4 exits. We've had 1 IPO. We've had 2 purchases at a premium. So we've had some actual wins. And then just to give you a couple of examples for you to visualize, Now RX is a company that's up about 42x since the first time that we rated it positively. They're on Seed Invest right now, and you can invest in their current round of funding. I believe the first time we recommended them, it was like an $8 or $12 million valuation. Now they're a $250 million valuation. Now our Alto IRA was a company that was rated a 4.8 out of 5 on KingsCrowd. They raised at a 30 million valuation on Republic about 1.5 years ago. They've done 2 subsequent rounds from institutions, and they're now valued at over $250 million.
Nice. So that's awesome. So what is next for KingsCrowd?
I'm really excited about this. We actually just launched it a few weeks ago, which is KingsCrowd Capital. One of the things that we've been asked time and time again over the last few years is, can't you just provide me with some one-click diversification?
Right.
Like, I trust you, KingsCrowd. Just don't make me do the work. I don't have time for that. And we know that the predominant number of investors out there, probably not the people on this show, but the predominant amount of people want someone to just manage their money and do it for them. And so we didn't feel at the time that it was the right moment to launch a product because we wanted to have time to look at how our ratings were performing, to optimize the ratings, so on and so forth. But we hit a point earlier last year where we said, okay, we think we're there, let's prep to launch this product. And so KingsCrowd Capital was really created with this idea that we could launch any data-driven themed fund you could think of because our deal flow is automated. The marketplaces provide us all the deal flow, and our data is our core product, which is already deciding for us what are the good companies worth investing in. So to spin up a fund is almost no incremental effort, but allows us, for so many people who don't want to do the work, to provide that one-click diversification. So we launched that about 3 or 4 weeks ago. We've already circled hard commit $2 million and already have well over $1 million of it in the bank account, which is just incredible.
Yeah, and I just want to make sure that I let my listeners know that I'm one of those guys as well. And so on my show as well, as you said, maybe some of those people may not want to do it, but I decided to invest as well. So my money is as well in that 1 million. So full disclosure, I'm part of KingsCrowd Capital. So, but I still have one more question. Is there a conflict of interest?
Great question. So the way that we always talk about our business is we are a data company first that can create financial products. So we don't decide to rate a company positively because we want to invest in it. The ratings come out. So the way the process works, a deal goes live on one of the platforms. It comes through our rating system. Our analysts go through the ratings process. The score is spit out, which basically we can't control, right? It's the data decides that. It has to be between a 3.7 and a 5. Only will those deals then be sent for the final review by our CIO. He will only see the 3.7 to 5s and then decides which of those companies will ultimately invest in. So it's not, oh, we invested in it, we want to give it a positive rating. It got a positive rating, thus it gets consideration for investment. So we have that wall there to make sure that we're never rating something positively just because we want to invest in it. It's the other way around.
Okay, makes sense. So then my other question is that as an investor in KingsCrowd Capital, would I be able to see all the businesses you are investing and the kind of allocation? So in that, just to turn it around, because out of that, I may like a company or two and I want to invest more directly.
I feel like you're setting me up here. This is fantastic. We actually have a portfolio management tool that I mentioned, right? So what we're going to do is for folks who are non-accredited and can't get into our fund right now. And by the way, I want to be clear, we would love for non-accredited investors to partake in our fund. The legal rules right now make it almost impossible to allow
if you are advertising, you can't have.
It's really unfortunate, and we want to be a part of pushing that change forward. But for now, it's accredited only. Nonetheless, what we want to do is allow people to be able to follow along. Sorry, I muted there for a second. We want to enable people to be able to invest alongside us and decide, hey, maybe I want to double down on a company. So we're going to make public the KingsCrowd Capital Fund 1 portfolio. And each time we add an investment, you'll be able to track that in the investment portfolio that we make public.
Oh, that is great. And there was another thing as well. I know I personally also invested in KingsCrowd. So on Republic, if I'm correct. And again, I'm not advertising for KingsCrowd here, but I want to understand why KingsCrowd also, there is also capital side. Why does KingsCrowd raising capital right now, and for what it would be used?
Yep. So KingsCrowd Inc. is our business, right? That's the core business. KingsCrowd Capital is a wholly owned subsidiary of that business.
Okay.
That is going to be our financial products division, where over time we launch, an ESG fund, a female founders fund, a clean tech fund, so on and so forth. The grand vision is we'll have billions of dollars in assets under management sitting under KingsCrowd Capital, but that's wholly owned by KingsCrowd Inc. So the management fees and carry will come up as revenue into the KingsCrowd Inc. business. So we are currently raising capital on Republic for our Series A. So we're about 4 years old. We've grown from an idea on a piece of paper to, as you mentioned, 23 full-time. We've actually now raised about $6 million total dollars since we founded the company. We've grown to over 400,000 total subscribers now. We've built a really formidable business. And so now we're raising that Series A for a few key purposes. The first one is asset class expansion. So this is going to enable us to go into things like collectibles and real estate and eventually NFTs and crypto as well, so that we become the place you come for alternative investing data. Then we want to look at geographic expansion. The UK is 5 years ahead of us as a market, but they still don't have a data solution like ours. Nope. So we're going to look to expand to the UK, eventually Latin America, so on and so forth. And then lastly, we've actually never marketed our business. We've never really spent a dime on customer acquisition. Now we need to start to invest really heavily in expanding the access and reach of our product to many, many more people. So those are kind of the key buckets where we'll be investing a lot of our capital. But if you join KingsCrowd Inc., which is available to non-accredited investors as well on Republic into our Series A, the nice thing is, in a way, you're getting exposure to KingsCrowd Capital, because the carry and management fees will come up into KingsCrowd Inc.
Oh, that's awesome. Thank you so much for explaining the KingsCrowd Capital as well as the KingsCrowd Inc. Now, I want you to take out your crystal ball and tell us what are some of the trends you are seeing in the startup space. And I have been looking, as I said, I've been investing a lot, trying to follow. Is it good to invest in, let's say, space travel right now, EV technology, cannabis, renewables? What are some of the trends you are seeing?
A couple of ones that I'll mention. First off, I kind of caution people when you're getting into some of these crypto projects. I would say we are at a point of being overhyped and very overvalued. So just be careful as you wade into those waters. We are definitely seeing very high valuations in that universe. Especially the metaverse, all of this stuff right now is still incredibly immature and misunderstood. So be careful going into those. There's definitely a lot of people trying to hop on that bandwagon. An area that's been really interesting, though, to me, is the clean tech space. We are seeing a lot of companies come to market and raise capital for their clean tech companies. This is everything from battery power technology to wind and solar technology. And there's some really interesting new companies that are emerging in that space. That's one where I think valuations are reasonable, but there's a lot of extremely interesting projects right now that are going on that are worth taking a look at.
Oh, thank you. So, and the last question before we take a break, everything has been on tier lately, especially last 3 years, stocks, real estate, crypto, even the startup space, the valuation, everything's out of this world, right? It's been crazy. And just recent example, I invested in Impossible Foods. When we invested, that was valued at 12 billion. Recently, it's raising now back at like 7 billion valuation. So what do you think is coming?
There's certainly a day of reckoning that will be coming our way. Any market can't be a bull market forever. So the reality is we're going to see a downturn. Now, what I tell people, especially as it relates to startups, is that when you're investing, especially in early stage companies, you're investing in them for what they look like in 5 to 10 years, not for how they look in the next quarter, the next 6 months or 9 months. So we're actually seeing a decent amount of turnover from the public markets. And one of the reasons why the public markets have been going down, institutional investors are starting to ask to get into earlier stage private companies. So I think whenever the day of reckoning comes, we're certainly going to see a bunch of companies fall out because people are going to be a little more thoughtful about how they deploy their dollars. So those companies that have questionable metrics aren't going to be able to raise follow-on capital. But I do think that the companies that are fundamentally sound now, while they may take, a beating and have to survive through a bit of a tough period, I do think if you're investing in the right companies with that 5 to 10 year lens and they have that same mindset, you're going to do okay long term. Like anything, it'll take a dip and it'll come on back at some point. So I like the fact that you have to hold on to these investments and that they are longer term, because I do think that lets you weather the storm a bit better.
Wow, that's a great point, and I totally agree, right? Because that's where diversification comes into picture and holding on to some of your investments long term. So let's take a quick break, Chris, and after the break, we'll go to the same questions I ask every guest.
You're listening to the Wealth Matters Podcast.
The Wealth Matters Podcast.
For more info about what we do, check us out at wealthmatters.com. It's wealth, WEALTH, matters, MATRS.com.
Welcome back to Wealth Matters Podcast. Chris shared lots of golden nuggets right there about startup investing and the new trends which are emerging in the startup space. So Chris, are you ready for fire round?
Let's do it.
Would you be changing any business or investment strategy after this pandemic is over?
I don't think so, only because, again, my kind of world lens has always been thinking 5 to 10 years out. And my whole thing is pretty simple. It's diversify, invest in the technologies that kind of, change the world over the next decade, and go across many different asset classes. That's what I've been doing since I got out of school. I don't see changing that.
Oh, that's great. Favorite real estate, finance, or any startup related book?
Favorite book. Richard Branson has a wonderful book. If you're a founder or an entrepreneur, and even if you're thinking about it, backing founders and entrepreneurs, Richard Branson is like one of the coolest people to learn from.
Yes.
So I highly recommend. He has a couple of books. You should check them all out.
Okay, I will definitely. Any tool or website you recommend or cannot live without? Don't mention KingsCrowd.
I'm going to sound really old school here, but I think it's actually really important for a lot of startup founders that you read things like the Wall Street Journal. I actually read it every day. It's just so good. Even though we're living in this world where we're startups and we're really early stage, we need to be looking at the macro things that are going on around us. And you just get such a good worldview from keeping up with that.
Oh, that's good. Any advice for beginner investors?
Start slow and diversify.
Those are like the golden words. 100%
Absolutely.
agree. How do you give back?
I'm sorry, can you say that one more time?
How do you give back?
How do I give back? So, one of the things, or one of the reasons why I started KingsCrowd was, again, because I wanted to have a positive impact on the world. And from my worldview, I feel very strongly that making private market investments accessible to everyone could become one of the most powerful ways that we have to create wealth generation that becomes multi-generational wealth for millions and millions and millions of Americans. No matter how much better our income policies in the country get, our minimum wage, however high that goes, working every day of your life and just saving that money will not get you to a place where you have abundant wealth. You ultimately have to invest it, and having more asset classes accessible in a thoughtful way that you can invest in is the most powerful opportunity we have to help bridge this wealth gap that's been generated over the past 3 or 4 decades. And that's what I'm trying to solve for each and every day. Ultimately, how do we make this asset class of startups and real estate and all these things that have typically been only for the ultra elite wealthy people accessible to millions and millions of Americans? So right now, that's where I put all of my energy in hoping to solve for that problem over the next decade.
Oh, this is great. How can my listeners reach out to you?
Happy to chat with anyone who's interested in what we're up to. You can hit me at chris@kingscrowd.com. Always happy to chat.
Oh, thank you so much, Chris, for your time. I had a lot of fun recording this episode.
Thank you, Alpesh. It's been a lot of fun. I really appreciate it.
Thank you.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!